Okay, I'll get through this pretty quickly. It's a bit of a slideshow. I would have liked to have been part of that discussion earlier because, talking about juniors funding projects and dealing with ESGs is something that's really challenging. But, we often deal with things that are more life-threatening, like not having any money at all. I know you have to do the business. So if you don't do the exploration, you don't develop gold mines. And we are now a company that's taking ESG very, very seriously. And we're doing a lot of work on that side on our project, taking everything up to AISC standards. So obviously we were here last year and the last few years. We love coming back to Cape Town, giving everyone an update on our project. You can see the photo. We're getting very close to commissioning. So I'll just slide on. So some forward-looking statements. If anyone wants to have a look at any more details on our website. The last 18 months, and I won't read each bit here, but we've gone from sort of funding the project. We broke ground in January last year. Currently, we're sort of less than 18 months into the build, and we expect to be pouring gold before June. So we've set a pretty good pace. The company's transformed from an exploration company into obviously almost a producer. Anyway, this is on our website, so you can go through it in more detail. So there's one slide, one takeaway that you should sort of have a look at. We're currently the highest margin gold project in construction, almost in production. We're unhedged, so we're looking at almost $1,000 or maybe over $1,000 per ounce margin on nearly 300,000 ounces in production for our first 12 months. We're on track for Q2 production, so we're very, very close right now, and I'll show you some slides in a few minutes. We've got a resource of about 3 million ounces. We've got about just under 2 million ounces in reserves. We've got plenty of upside on the project, and it's sort of not only do you balance your ESG requirements, but when you're running an exploration company, you've got to balance how much drilling can you do before you start production. So we did enough to get it funded. We've got plenty more drilling to do, and we'll be increasing our resources and reserves going forward after this. We expect to start deep drilling on our high-grade zone again next month. Burkina, obviously, hopefully most of you are familiar with Burkina Faso. Historically, it's been a very stable place. It is still a very good place to operate. The east and the north of Burkina have been experiencing a lot of unrest recently. We're hopeful that's going to kind of get under control in the near future. There's a lot more French influence in the region, and the government is doing all they can to reduce the risks for those people living in those border regions. But in saying that, there's still 14 mines in operation in Burkina, all generating cash flow, paying dividends, and we hope to join those ranks very soon. Our company's changed a lot in the last 18 months. We've gone from a small exploration company to a internationally owned almost producer. We have got a debt facility with Taurus. We've drawn down almost all of it. We've got one draw left at $25 million. We're about 90% complete on the build. We're about 75% complete on the spend. And we've got plenty of headroom to complete the build on time and on budget. The market cap's about 400 million Australian, which is less than our first year of free cash flow. So I think if you're an investor, hopefully that's why you're here. You should buy some shares in WAF. I can tell you it's a good idea, notwithstanding obviously normal risks associated with investing in West Africa. Plenty of coverage from analysts as well. The board's been strengthened recently. We've got 6 on the board, 2 executives, 4 non-executives. We're building our team out as well. We've almost finished hiring our operations team, so the construction's sort of winding down, operations ramping up. We've managed to do that in Burkina in the last 12 months. So, there's perception and reality operating in Burkina. It is a challenging jurisdiction at the moment, but you can get things done. So, I can see Paddy sitting there. I'm encouraging Paddy to go as well, and I think, historically Burkina's been a fantastic place to operate, and I don't think it's changed. So, certainly the central southern parts of Burkina are still very, very stable. It's like saying, do you invest in Mexico? Well, there's parts of Burkina right now that are probably uninvestable, but the majority of it is. So it's a good place to operate, and it's got a well-developed mining code. We're under the new mining code, so I think we've managed to achieve what we've done on time and on budget so far, and I think you need to take risk as a investment decision globally these days. It's changed a lot for all of us. So anyway, we're getting it done. We're going to pour gold very soon, and we're going to pay dividends. So that's pretty much all I can say about Burkina. So this was 12 months ago. Just when we were here last time, that was what it looked like, and I can tell you right now it's 90% built. That's what it looks like right now. And this is working in Burkina Faso, so just getting on with it, getting it done. We haven't complained about it, we haven't moaned. It's been tough, but you know what? We just got on with it. So it's almost finished. We expect to be pouring gold in the second quarter of this year. Look, the snapshot of the highlights of the project. Look, our project's conventional. We're doing contractor mining, open pit underground, conventional processing. The numbers at sort of 1,500 US gold speak for themselves. You don't go to West Africa for a 10% IRR. Clearly it's over 100% IRR, that's why we're there. It's on our website, you can look at it in more detail later. Really the engine room of the project is M1 South, which is very short strike length, high grade, makes a lot of money, conventional bottom-up mining method. We're trying to get as many ounces out of this as possible per annum, and that's really how we make the money on the project. There's about 6.5 years of reserves on this part of the deposit, and we will start drilling later on this year. What I'd like to do is build out a 10-year mine plan on the underground. Currently it's about 6 years, and we've already got more than 10 years on the open pits. There's a bit of a drill program at the bottom of that. You can see we've got mineralisation down about 500 vertical metres. We've hit mineralisation at depth beneath that, 25 at 15 grams, which shows the system still open and still going very strongly. And you can actually see that the mineralisation is quite straightforward, so we don't have any issues with recoveries. A lot of the gold at M1 South is visible and free milling. We've already started mining M5. We've got about 200,000 tonnes from M5 on the ROM pad. We've mined all the waste around M5 to build the tailings dam and water storage dam and other construction areas. This basically fills the plant for 10 years. We've got more than 10 years worth of feed. There's 2 million ounces in resources, just under 1 million ounces in reserves. And you can see that central part of it just there is, it's all ore, so it's a very simple, straightforward deposit. Most of the ounces are in one wireframe, and it's about 40 to 50 metres wide for most of the 2 kilometre strike of the deposit, so it's very straightforward. So AMS, which is a subsidiary of Ausdrill, mobilised in December, and they've been mining since the 23rd of December, so just before Christmas. So we're ticking all of our boxes for getting underway. So if you want to poke holes in my project, go ahead, but we'll fill the back of the schedule in. We'll average 150,000 ounces at the back end. It averages 250,000 ounces at the front end. It's a banker's dream. Would you say, Tim? Yeah. All right. So look, it's got a very, very strong cash flow at the front of the project, and that's not been an accident. We've engineered that. We've brought forward underground mining and open pit mining, high grade zones early on, and that generates a lot of cash in the first sort of 4 years of the project. What we plan to do is obviously keep drilling, add more ounces to the back end of the project. So it'll average 250,000 ounces in the front of the project and 150,000 ounces at the back of the project. So it still makes a lot of money. Another shot of the project, we're getting close to completion. The central part of it, you can see the power station, tanks in the back, and then in the background you can see the ROM pad with ore being stockpiled. Some more snaps from the project. So we've got the primary crusher, power station, mine service area, and the stockpile. We should start crushing dirt in the next sort of 3 or 4 weeks. So it's all on schedule. Again, camp, tailings dam, water storage dam, and the portal for the underground. So with the underground, which is really where we generate most of our cash, we're more than 160 metres vertical at the moment, beneath the ore body. It's a bottom-up mining method, so we're going to get underneath the ore body, come in and put the development up. We expect to get first development ore next month and first stoping ore in September. You can't do this without a team, so it's not just me doing this. We've got a fantastic team on site. We've got JB, who's our country manager over here. We've been extremely fortunate with the people we put together for this project. It's been a real team effort, so you can see our underground team, our CSR team on site, like what we were talking about previously. You can see we had a meeting after Semafo's unfortunate incident last year where people were killed in Burkina, and we had a minute's silence on site, so you can see everyone there having a briefing from our management team. And then our IT guys up a tower, setting up some Wi-Fi for us. So look, it's a excellent place to work. We've got a very happy team on site, and we're getting on with it. So on the E&S, very, very important stuff. You can't do this without good stakeholders and happy stakeholders. So we put a lot of effort into making sure our stakeholders are a part of our project and happy. It's a challenging thing to do, and to do all of our work to IFC standards is not easy. And we're in the process of complying, but for a single asset company doing project finance in West Africa, it's challenging. So I couldn't underestimate or couldn't sort of say how hard this is. It is quite challenging. We had a very relatively small move. We had about 700 people. We built nearly 300 homes. We're hiring locally, so we've got more than 50% of our workforce comes from our local area. More than 95% of our workforce is Burkina Faso, and directly for us, we'll have about 400 people working on the project. And if you include our contractors, it's probably more than 1,000. So, we are the biggest employer in our region. And also, we've got a lot of females, ladies working on our job, and we're encouraging them to. Well, we want to get more. So really, just quickly, we've ticked most of the boxes. We're almost there as far as the construction goes. We've started mining. We expect to start crushing ore in the next 3 or 4 weeks, and we'll be pouring gold by June. The other thing we're going to do is obviously start drilling again now that we've got to the point where we can see the end in sight. I'm sort of getting more comfortable around costs and how much money we've got left over for exploration, and really I turned the taps off this last year and the year before for adding value from drilling perspective, because you don't want to run out of money and sort of wish that you hadn't spent $10 million on drilling when you should have spent it on the plant. So we can see the end line in sight. We're going to start drilling again next month, and we'll add more value to the project. But if there's any more sort of questions, booth is N4. You're more than welcome to come and ask a few questions. Thank you.